Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend Dan Bird. How you doing, sir?
I'm doing very well. How about you?
I'm doing great. You helped me execute my first successful trade, and by successful, I mean profit, in 20 plus years. I honestly thought if you would have, well, no, thank you. If you would have talked to me 9 months ago, I would have laughed at you if I would have been in the stock market. But you brought an interesting angle, a skill set that I do not have, and it removes my biggest weakness, which is emotion. Right. So I want to thank you for that.
Yeah, it was good. It was Robinhood. You identified them. They had an earnings announcement that sent the stock lower. You said, I think it's going to probably bounce back. So we used the risk calculator to manage our risk and our sizing of the deal, the trade.
Yep.
Then we entered the trade in 2 tranches.
Yep.
We entered one below what the price was and one a little above where the price was.
Yep.
And started off at about $12.63, I think was the entry point.
Yep.
And then it started going up, and I put a sell order in at 20%.
Yep.
By the way, it never really got past that 20%.
Yeah, no, it never did.
It started coming back.
Yeah.
Yeah.
That was
started coming back down right there.
Yeah.
So we sold half of it at a 20% profit.
Yep.
And we sold the other half at about I want to say an 8% profit overall.
No,
I think you ended up at around 10%, 9.5 or 10%.
Yeah, in about a 2-week period.
Yeah, no, so less than that. Less than that. It was a little more than a week. It was,
okay, 6 or 7 days.
6 days. 6 days.
Yeah. So this is my impression of what happened. So I'm trying to blend 2 worlds, right? I was very much the Warren Buffett guy years ago, where I would read financial statement, look for the cigar butts. It was just too time consuming. Over the years, I have a macro view of the world, right? Studying the consumer. But what you allowed me to do is take an opinion that was educated. Robinhood had a horrible announcement. It washed out lots of people. And I'm like, anytime fear gets in the way, I want to play the other side. Right. So then we right-sized the transaction. So I risked very little, which is awesome. We got in at different points because you can validate in your opinion or not. Then we took money off the table, which I got to tell you is equally important to the risk, because ordinarily my emotion would say, let it run, let it run.
And by the way, it's just as hard to do.
Exactly. This is why I love this.
It's sometimes harder to sell your stock.
It is.
Because you fall in love with it.
Exactly.
It becomes your baby, right?
Yeah. No, I totally agree. Emotion hits me both ways. So this technical analysis, these stops, these tranches, the trailing stop once we had a winner, so we protect the downside. Everything that we're doing is so awesome. And oh, by the way, I risked very little. And I can recognize my winnings. I'm so happy.
It's discipline is what it is. Yeah. And it's creating a set of rules, which I've created over a period of time.
Yeah.
And sticking to the rules, sticking with them.
I am a very disciplined individual, but I never bothered to learn any in stock. So I am so happy where we are at right now. This is a
hard time to do successful trades, by the way. I'm pretty much all in cash right now.
Yeah.
So I'm only trading where I can see opportunities, usually short term, that look pretty solid.
And short term, just so people realize, is that seconds, minutes, hours, days? Weeks?
No, for me, short term is days to weeks.
Okay, just want to make sure.
I'm not a day trader. I'm more of a swing trader or trend trader.
Okay.
But I mean, not saying that there's anything bad of being a day trader or being a Warren Buffett and holding forever.
Yeah.
It's nothing bad on any of that. It just depends on what you want to do. So the rules are really important. You have to stick with the rules. The other thing is, based on what we're learning, is we can start when the market does turn. We recognize the bottom, and we're going to get that big bounce at some point. It might be the end of the year before that happens.
Maybe.
But when that happens, we will be ready.
Yep.
We can start increasing the size of our trades.
Yep.
And even move the stops some. I mean, on that one, we moved the stop pretty conservatively.
Yeah.
But we can move those down a little bit too, and that let the trades actually run further when the market starts to take off.
That's
But
awesome.
you have to understand, first you need to look at the big picture with the overall market's doing.
Yep.
And then, and I'm talking about over 15 years, like we just did in that
Yep.
last
Video too. Yep.
And then start to narrow that down. What are the industries? What are the sectors that are performing? What are the industries performing? What are the stocks inside of those industries? And then depending on what the market is doing at that particular time, will determine how much of a sizing you can do on your trade.
That's awesome.
So if the market turns, we could, be in a position to make a lot of money. So
There you
just
go.
a little bit of money.
Yeah. Well, hey, you have no idea how excited I was when actually that trailing stop stopped me out. I'm like,
Yep.
Now it's official. I have my first successful trade in 20 some odd years. Or
Right.
yeah, it's
And you didn't have to think about it. You didn't have to worry about it.
no, these rules are awesome.
Yeah.
These rules are awesome. Well, hey, one of the things I sent you last week that I wanted to look at is dividend stocks.
Right.
Did you have something that we could look at? Because I think we might be in for some pain, and maybe hiding out in some dividend stocks might make sense. Do you have anything to show?
I do. I typically don't usually look at dividends as a way of trading for my portfolio because
no, of
I'm usually
course.
I like doing growth stocks.
Mhm.
And growth stocks are getting hit right now, which is one of the reasons I'm in cash, because when interest rates go up,
Yeah.
growth stocks and primarily technology stocks, they move based on future earnings,
Right. Correct.
right? And higher interest rates will hurt future earnings. So that's why a lot of those stocks are coming down right now. So mostly what I do is growth stocks.
Okay.
But dividend stocks is certainly really a good thing to do and understand. And depending again on what your goals are, will determine what you really want to do. I'm going to share my screen. I've got a platform that I use where we can actually look at some dividend stocks.
Okay. Oh, there you go.
This is called VectorVest. VectorVest was created by a guy back in the 80s. He's close to 90 now. But he was an engineer, and it's all based on math, based on algorithms. So it's a combination of technicals and fundamentals kind of combined together. And there's lots of different ways you can slice and dice the data from all of these stocks. And one of those ways are some searches that he created. And there's some here for dividend stocks.
Okay.
So we can look at high VST and YSG. YSG is yield, safety, and growth. So what is not just the yield of the stock, but the safety and the growth as well.
Okay.
And then it ranks them based on this particular ranking, VST and yield, safety, and growth. Okay. So it's the cream of the crop. It's the best of the best for dividend stocks.
Gotcha.
So these are the top ones that it ranked. So you'll probably see a trend here. There's some energy stocks, oil stocks.
Yeah. There's
some steel in here.
Yep.
Some food, which are staples.
Staples, yeah.
Right. There's another food stock, staples, energy.
Yeah.
There's a drug company. So there's our friend RF.
Oh yeah.
Regions Financial.
I remember that. Yeah. So
these are the top dividend stocks. And if you move over here, you can see the dividend yield. So 1.47, 3.62, these are annual yields. So this one here.
Yeah, what is that one? Let's play with that one. What is that?
Allianz Bernstein. That's
no idea.
Financial.
Oh, it is. Okay.
No, it might be a drug. Actually, it might be a drug stock.
Okay.
Well, let's take a look at it. We can look at the analysis.
Financial.
Provision of research, diversified investment management, related services. It's financial, right?
Got it. Okay. All right.
Alliance, actually, it's not Allianz. Allianz Bernstein. So that's a 7.25 dividend yield. And its safety is 56, so that's kind of medium. And then the growth is 15, so not a fast grower. It's got a hold on it right now. But one thing I can do is I can look at these top 20 and look at a graph of each one of them.
Okay.
So here's FANG, and that one looks pretty good. So if you think about what's happening with Ukraine, oil stocks are probably a good place to be right now. Because if Russia does invade, then the price of oil is going to skyrocket.
Yeah, you would think. Yeah.
Right. So this is a petroleum stock, and that chart actually looks pretty good. It's starting to break out right there. So we're going right down the list. This is the gold, I mean, a steel stock.
Yeah.
It hit resistance. So you can see it hit the top where all of these went up to, and then starting to pull back again.
All right.
So that might be a good one, but it might not be the right time right now. Here's another steel.
Yeah.
Looks kind of similar. There's a financial. It's rolling over. There's Tyson's Food. They had earnings right here.
Yep.
They had a big gap up on earnings.
Yeah.
So that might be a good one. This is Wood Products. That one's moving up. Sanderson Farm. By the way, this line at the top is the value line. This is what VectorVest ranks the value of the stock.
Oh, wow.
And what they say is that the price of a stock will eventually meet the value.
Oh.
Now, sometimes that means it will go up to meet the value, but sometimes it means the value will come down
exactly. The value
to meet the price. So you have to understand that. But you always want the value to be above wherever the price is.
All right.
That one doesn't look too good. That's actually the one we just looked at, 7.25. That looks like it's starting to head down. This one here does look good. Cheniere Energy, it's another petroleum and liquid natural gas producer. So that one actually is the nicest looking chart so far.
Okay. All right.
These two down here, this shows you the earnings growth. And you can see earnings have been going up pretty well. And then the growth of revenue over time. So growth itself has been going up. So this one here is actually a pretty strong looking chart.
Okay.
AbbVie looks pretty good. LPX. There's Regions starting to roll over. Look, the financials are starting to roll over a little bit. Their growth trend is down as well.
Yeah.
All right. Another one we can look at is this one here called Don's Dividend Dandies. He's actually taking, you can see the way he's filtered this. So it's the volume has to be over 100,000. We want a recommendation of buy. Over 13 weeks, the delta of the dividend yield is greater than 10%.
Okay.
So we want high dividend paying stocks here. And now it's a different mix. Now there are a lot of shippers in this group.
Interesting.
And this one right here in particular has a dividend yield of 18%.
Oh my God.
And this one here, which is an oil stock, has a dividend yield of 15%.
Wow.
So those two actually look pretty interesting. And if we graph the top 20 again, that one's starting to come down. This is a trucker, I mean a shipper, shipping company. That's another shipper that's hitting resistance. There's another shipping company starting to trend up. Here's also a shipping company, and this is the one that had an 18% yield.
Yeah.
So this one here is hitting the resistance and starting to pull back. So this one might be a good one to get into somewhere down here around $10.
Okay.
If it pulls back to 10. Now, the thing about dividend stocks is you want to hold these for a long time.
Right.
Right? Because the dividends are only going to pay out usually quarterly.
Yeah.
Right? So these are ones that you want to be in and stay in. And here's the other one. This is a 15% dividend yield. And this is actually looks like the best chart. It's starting to break out and is in the petroleum industry. And the earnings and the growth both are trending higher. So I think of all of them, this one here looks like the best one.
Okay. Very, very cool.
If you were to do something, this would be the one to do it with.
Very, very cool.
Plus it's an oil stock, so the oil stocks all might go up next week.
Gotcha.
But that's one way, one tool that I use to identify potential candidates.
Yeah.
Lots of different ways I can slice and dice the information.
Yeah. Well, this is just interesting because again, I think there's a lot of investors who may get burned like the .com crash. You don't have to exit like I did. You could alter your investing and maybe look at dividends. There's lots of the stock market is so many nooks and crannies you can get into. I just wanted to talk about dividend stocks as it was something we hadn't done before.
Yeah, no, I think it's definitely a good thing to know, good thing to think about. If we do make the turn and we get the correction wherever that might be, whether it's 4,300 or 3,700, and then we start to recover maybe towards the end of the year. that might be a good time to get into dividend stocks if they're ones that you want to hold for a long time, because
Right.
you're getting the best of both worlds. You're getting the high dividend, but you're also getting in low, so you're getting the appreciation on the price as well.
Yeah, very, very cool. Well, Dan, I want to thank you again for your time this week. You are helping the channel learn a new skill.
You bet. Let me put the
Yes,
let me put the newsletter up one more time for anybody that's interested.
absolutely. Folks, this is something you need to read every weekend. He sends it out Saturday or Sunday. You want to be on the list, see what's going on. breakpointtrading@gmail.com.
Yep. Just send me a note. It's free. I'll add you to the list. I do this Saturday or Sunday every weekend. These boxes here are from Investors Business Daily. So they kind of show you what they think the sentiment of the market is. Right now, they say the uptrend is under pressure.
Yeah.
But look at the leaders up in volume. Archer, that's a coal company, and ExxonMobil.
Yep.
So that's all, because of the Ukraine news on Friday, all the oil stocks started to go up.
Very, very cool, Dan. Thank you very much.
All right, you bet. Have a good weekend.
Thanks.